Crown set to be sold to private equity giant Blackstone in a $10 billion deal. Unvaccinated people 34 times more likely to end up in intensive care, and plenty of profit results from JB HiFi, Beach Energy, carsales.com and more. It's Tuesday, the 15th of February 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Then stay listening for Sean's chat with Adam Schwab from Luxury Escapes about the bounce back in the tourism sector. And speaking of tourism, Sean, you're doing your bit this week for regional tourism. You're broadcasting from central western New South Wales.
I am, Michael. I'm back in my hometown of Orange. Beautiful part of the world. And I tell you what, at this time of year, it's absolutely spectacular.
Yeah, it really is. Okay, let's get into it. Sean, the board of Crown Resorts has recommended the $10 billion bid from US private equity firm Blackstone, but it's not quite over yet.
That's right. The focus is now very much on James Packer and whether he decides to vote his 37% stake for the bid. But it's hard to imagine the board of Crown coming out so supportive of the deal unless it had at least a nod of encouragement from Mr. Packer. The board of Crown, led by former Telstra chair Ziggy Switowski, signed the deal yesterday morning after weeks of negotiations. As you mentioned, the $13.10 a share offer is worth around $10 billion when debt's included. Without the debt, it's worth about $8.9 billion, and Mr. Packer's payout would be $3.2 billion. Not bad. The bid price is a 32% premium to Crown's shares on 18 November last year, immediately before the third Blackstone offer. In fact, the first bid was made in March last year at $11.85 a share. There's been a couple since, and this final one at $13.10 a share is about 10% higher than that very first bid.
Okay, so does this mean then shareholders will get cash? What's next?
Yes, so shareholders will get cash and they'll like that idea, but there are still plenty of hoops to jump through apart from Mr. Packer's decision. There's Foreign Investment Review Board approval. Then, of course, there's shareholder approval, which will come down to Mr. Packer. The third big one is the green light from gaming regulatory authorities. Now, given Blackstone already invests in casinos, probity checks are less of a risk if it buys the gaming group. Crown's share price rose 2% yesterday to $12.64. That's still well below the offer price, suggesting shareholders are less than fully confident that the deal will go ahead. Now, the board of Crown has done really well to extract a higher price. Mind you, other suitors, notably the Star, helped out. I reckon, Michael, this deal will get done, and if not this one, then one that's even better. We now know the floor price for what Crown will sell.
Okay, so how did equity markets perform yesterday?
There were some pretty big moves on the market, in part due to profit results and in part due to the geopolitical tensions in Europe. Investors are looking for safe assets, and that's pushed the price of gold to close to a 7-week high. As a result, the gold miners did very well yesterday. Ramelius Resources, Evolution Mining, Regis Resources, Silver Lake, Northern Star and Chalice Mining were all up sharply, while market leader Newcrest rose almost 4%. The banks also did really well, led by Westpac. It closed up 4.4%, taking its rise this month to 17%. That's a whopper. Now, yesterday it announced it had completed its $3.5 billion share buyback. Michael, the stock that's not doing well is Blood Plasma Group CSL. Its share price is down 24% since late November, including more than 2% yesterday. Growth stocks like healthcare companies don't do as well when bond yields are rising, but 24% is really quite a sell-off. In the end, the S&P ASX 200 finished yesterday up 0.4% to 7,244 points.
Okay, so what happened on Wall Street then overnight?
Well, Michael, the major indices rose, led by the tech-heavy Nasdaq, which was up 1% in early afternoon trading. But markets remain very skittish, primarily due to the Russia-Ukraine situation. European markets were sharply lower, led down by travel and tourism stocks. Again, geopolitical tensions are driving markets in that region. The Aussie dollar is trading at 71.4 US cents. Brent crude is around $95 a barrel. And gold is worth nearly $1,870 an ounce.
All right, we'll be back in a moment with the rest of the day's business news. Lots of stories to talk about this morning, Sean, and plenty of corporate profit results this week. One of the better known, one of my favourite stores, JB HiFi, cut its interim dividend after announcing falling revenue and profit.
Yes, that was despite soaring online sales. In fact, online sales jumped by not far off 2/3 to about $1.1 billion. Now, obviously, lockdowns hurt the retailer in the 6 months to December, but the group is still performing well. It said it will return $250 million to shareholders via a buyback. It also announced a higher dividend. And Chief Executive Terry Smart said sales in January were strong at both brands. That's JB HiFi and Good Guys. Now, for several years, JB HiFi has really got retailing right. Michael, you're not alone in saying it's one of your favourite stores. People love it. In fact, its share price is up 25% on its pre-pandemic level, and that includes a 5% jump yesterday.
Okay, some of the other notable earnings results released yesterday. Take us through a few of them.
Well, car sales announced a 21% jump in revenue and a similar rise in profit thanks to strong demand for cars globally. We've spoken plenty about the wait time for new cars and the surge in demand and prices for used cars. But carsales.com yesterday said there's much more going on. During COVID, people have wanted to use public transport less. There's been very few international flights and very few international travellers, and people have been working from home. All these factors have boosted demand for cars. Also helping carsales.com has been much greater call for lifestyle assets, things like caravans and motorbikes and boats, and car sales have really benefited from that. Another one worth pointing out is GPT Group. It's one of the biggest property companies listed on the ASX, and it announced a 700% jump in revenue and in profit for the 2021 calendar year. Now, a big jump in property valuations and a very, very poor previous year, thanks to COVID, underpinned that results. But funds from the operations were actually flat. Its share price rose 1% yesterday.
Okay. Now, Sean, I mentioned at the start of the show a statistic that I find just quite extraordinary, and it came from the Victorian Chief Health Officer yesterday. You are 34 times more likely to find yourself in intensive care from the coronavirus if you're unvaccinated compared to someone who has had 3 doses. I find that incredible.
Yeah, if you ever want a statistic to prove to people that they need to be vaccinated and boosted, that's it. People who have received a booster are 88% less likely to die with the Omicron strain than someone who has had 1 or no vaccine doses. These figures came out yesterday as part of Victoria's efforts to encourage people to get boosters. Now, staying on the same subject, a study in the journal Nature Medicine says a COVID-19 infection can trigger heart problems months after the disease has passed. As a result, countries need to be prepared for an increase in cardiovascular conditions such as heart attacks, heart failure, and strokes. And Michael, just before we leave COVID, I'll run through the numbers yesterday. Queensland reported 3,750 cases and 6 deaths. New South Wales reported 6,100 cases and 14 deaths. Victoria was at 7,000 cases and 2 deaths. South Australia reported just over 1,000 cases and 3 deaths. And the ACT recorded 375 cases. Obviously way, way, way too high, but wow, it's much, much better than it was a month or so ago.
Yeah, that's right. Now, university students, Sean, are getting sign-on payments to join big corporates in Australia as the rush for graduates ramps up. It's not a bad time to be leaving uni.
No, it's a great time. When you finished university, did you have anyone approach you say, would you like a job?
No, I had to try and find one myself. And I certainly wasn't getting a sign-on payment, I can tell you that.
I mean, this is really a skills shortage story, Michael. There's intense competition for recent university graduates, and demand for grads is outstripping supply. According to a story in the Financial Review, graduates are getting what are being called Kickstarter payments, where demand is greatest. Now, the most popular organisation for graduates, according to Grad Connection, an offshoot of online jobs group Seek, is ANZ Bank. Next is the New South Wales Government, then Deloitte, Westpac and PwC. It seems that graduates are increasingly looking for companies with clean images and strong values within their strategic outlook. A spokesperson for ANZ, that was the most sought-after company, said the bank was degree agnostic and they were more worried about cultural fit. The bank started 120 new graduates yesterday, in fact, with degrees ranging from science, technology and business to engineering, arts and journalism. Love that last one.
Me too. So there's still a chance that I could get this sign-on bonus, even if it's been, 15 years since I finished my degree?
You can at least try, Michael. You can at least try.
Oh, I don't like the lack of hope in your voice there, Sean. Moving on, the Attorney General Michaelia Cash yesterday announced the federal government has reached legal settlements with 3 former associates of High Court Judge Dyson Heydon.
Yes, the claims relate to sexual harassment and were part of 6 claims investigated by former Inspector General of Intelligence Vivian Thom. Ms. Cash said the investigation found that the Honourable Dyson Heydon had sexually harassed all 6 complainants. Dyson Heydon had served on the High Court until 2013. This case really was disturbing. We now have the High Court, federal parliament, state governments and big businesses all embroiled in sexual harassment scandals. It's really shameful how prevalent harassment is in Australia. And Michael, as a male, I'm pretty sure I don't even know half of it. We need to actively change in how our institutions work.
All right, Sean, what's making headlines in today's news media?
The Financial Review is reporting that executives at Australia Post who earned salaries of between $300,000 and $400,000 received an average bonus of nearly $170,000 last year, up 22% on the previous year. Of course, former Aussie Post boss Christine Holgate quit after it was revealed she spent $20,000 on 4 Cartier watches to give to executives. Labor has accused Aussie Post of lacking respect for taxpayers. I just think this particular story gives a whole new light on what happened to Christine Holgate. And finally, The Australian is reporting that federal Greens leader Adam Bandt has ruled out any coalition with Labor after the party suffered its sharpest news poll drop in almost a decade, falling to an 8% primary vote. Treasurer Josh Frydenberg had in recent days warned voters about a Labor-Greens government, but Bandt said that's not happening.
Running through some of the other stories around today, the tensions in the Ukraine continue and almost 150 Australians are still in the country, according to the Department of Foreign Affairs and Trade. About 30 have evacuated in the past week. A week ago today, the government recommended all Australian citizens leave Ukraine immediately. Meanwhile, the head of Ukraine's mission in Canberra has said his country is well placed to resist Russian aggression, but said the evacuation of Western diplomats from Kiev risks causing panic.
Rating for 60 Minutes on Sunday night, where the Prime Minister Scott Morrison and his wife Jenny fronted the cameras, the ukulele playing session being my favourite, Michael. Anyway, the rating suggests that a British crime drama is more interesting than the Australian Prime Minister. The ABC's Vera won the time slot, watched by 587,000 Metro viewers, which was 13,000 more than watched 60 Minutes.
That's a bit uncomfortable, isn't it?
I thought the whole interview was very uncomfortable, Michael.
Now, some good news for travellers into Australia. You know how at the end of a long-haul flight, when you are tired and you're trying to fill out that little white sheet that you've been given and probably lost and then found again, and you've got to give it to customs when you arrive in Australia? Well, good news. From this Friday, they're being phased out and replaced by a digital arrival card. I have absolutely no idea why it's taken so long, but at least it's happening. And also, Tourism Minister Dan Tehan yesterday launched a new campaign to revive travel to Australia, targeting the US, UK and other parts of Europe. Good news.
And Michael, a couple of smaller profit results worth mentioning. Bendigo and Adelaide Bank's profit rebounded strongly, even though its profit margin declined. Bendigo and Adelaide Bank Chief Executive Marnie Baker said she expected the lender's residential market share to keep growing and its business and agricultural operations to keep up with competitors.
Yeah, and Beach Energy's share price jumped more than 8%, the best of the day actually, after it announced a 66% rise in net profit for the 6 months to the end of December. Higher oil prices more than offset lower volumes. It's amazing what a difference the oil price being $84 a barrel does compared to $47 a year earlier.
Sure is.
All right, what's the key overseas news this morning, Sean?
Well, German Chancellor Olaf Scholz is due in Moscow today, having already visited Kyiv in the Ukraine, as Western allies work hard to prevent conflict on the Ukrainian border. As the US continues to warn that Russia is on the brink of launching an attack, Mr. Scholz is expected to inform Vladimir Putin of the economic sanctions on Russia a war would trigger, and that the UK, US and Europe were unified against the invasion. Airlines are already cancelling flights to the country. The number of COVID cases in New Zealand is accelerating, with a record 981 infections yesterday. Now, until Sunday, the New Zealand government had been advocating a zero COVID policy, but that's now been dropped. And finally, India plans to sell a 5% stake in state-owned Life Insurance Corporation. The piece of the insurance giant is valued at $71 billion, which values the whole company at more than $1.4 trillion US. It's easily the largest initial public offering in India's history. The largest company listed on the Indian Stock Exchange at the moment is Reliance Industries. It's valued at $230 billion. The value of Life Insurance Corporation would be about 6 times that.
Wow, that's incredible. All right, up next, Sean, is the Fear and Greed Daily interview, and today you're speaking to Adam Schwab, the CEO and co-founder of Luxury Escapes.
Well, yeah, I mean, it's always a good time to talk about holidays, Michael. We get into a conversation about how the local tourism and travel industry is faring and where people are going and what's opening up, and it's a great interview to listen to if you want to just dream about your next trip away.
Yeah, I think we all want to do that right now. Okay, that's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 15th of February, 2022. Make sure you're following the podcast and join us online as well on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.